maybe.
Let's hope this is about online retail.
Alrighty, everybody awake over there?
I think so.
Yeah. Okay, will be exciting, maybe. I might make that promise. Okay, so we did flash sale membership sites, which are part of e-commerce retail. So flash sale sites fall under that large umbrella of retail, which so many things do. E-tailers, or more broadly e-commerce, is typically defined as a marketing strategy or sales platform, but has become a large booming industry in itself. B2C e-commerce is supposed to be up 20% worldwide. We're going to take a specific look at flash sales, which is a upcoming trend in e-commerce. It's called an alternative business model for e-commerce. The first wave of online retail e-commerce was represented by companies such as Amazon. Flash sales are considered the second wave of e-commerce, which is represented by companies such as Vente Privé, Gilt, or Roulala. Flash sale sites have grown into a multi-billion-dollar industry in just the last 6 years. The top flash sale sites generated more than $2 billion in sales in 2012. Just for reference, the total e-commerce in the U.S. is $278 billion.
The $2 billion is worldwide or US?
No, that's in the U.S. The $2 billion is in the U.S.
Okay.
So what is a flash sale site? Some of you may know. I didn't know until Daria told me about it, and it's actually kind of fascinating. It really is a new business model for e-commerce, and they're implementing a lot of new strategies. They offer deals up to 70% off. The deals expire after a very short period of time, such as 2 to 3 days. They're also known as private sale sites because the deals are only available to members. They have traditionally provided a platform for vendors to liquidate unsold or off-season products, but yet protecting the brand reputation as well. So a little bit on the industry background. They developed a niche during the recession when brands needed a discreet way to offload their excess inventory. They didn't want to advertise these huge discounted sales on their own sites or in their own stores because they thought it would devalue the brand. If Coach started selling their bags for $50, then everybody would have one, and they didn't want to have that associated with their brand name. Growth continued to persist due to rapid revenue, attractive financials, and a lot of VC funding coming into this market. Early leaders were new entrants to the retail e-commerce space, and it's a global industry with different suppliers regionally. The traditional e-commerce sites have struggled with cart abandonment, low conversion rates, and figuring out a way to get that impulse buy that the traditional bricks and mortar stores have been able to get in the retail market. And flash sale sites have kind of changed the model and figured out a way to fix some of these problems that were seen in the first e-commerce sites. They profit from customers looking for something to buy instead of customers buying something they need. So it's characterized by this psychological effect that they've built into this model, which is immediacy. So the deal is only available for a couple days. Scarcity, many products sell out quickly. Simplicity, buyers get an email, they go to the site, they buy whatever the deal is. There's no searching, there's no perusing the site. Actually, most of the search features on a lot of these sites that you would see on like a traditional e-commerce site have been turned off. They don't want you to search their sites. They just want you to go, put the deal in your cart and buy it, and it predominantly works. Group psychology, the direct link to Facebook to encourage featured dialogue. Social sharing, share to save more money. I just want to say something about the social sharing. In the case of these particular private sale websites, they're not like group buy sites. So you're not getting a better price for having more people buy it like Groupon does. It's still just like a flat discount. So the share to save more money is actually, if I share this deal with you and you sign up with them, then I'll get like, you know, a percentage off on my next purchase or something like that. So there's no there's no benefit to having more of my friends join other than that initial percentage that I might get. It creates competition with other shoppers, which creates an urgency and excitement because you're shopping against the clock. And they actually, there was like several like psychological studies that show that if you can get somebody to purchase in that first 15 minutes before all those endorphins calm down, and you're still excited, that the customer is more likely to actually buy the product because they're still excited about it and have that short time to buy it, and they won't, there's no like time for buyer's remorse or anything like that, for time to them to think about that. So the major players are here. Venti Privé is in France, was the first one. So first one in Europe, first one in general. They created the model. Gilt Group was the first one in the United States, and Zulily is like the new entrant and the up and coming, you know, leader. This
Does
just
Venti Privé do business in the U.S. or is it still in France or French-speaking countries, or?
It's pretty much just in Europe.
No, they started doing business here in 2011, but they don't have that much members here.
Okay.
80% of their revenue comes from France.
Okay.
So this just gives you a look at the most popular U.S. websites. Like I said, Zulily is the most recent one, but it's definitely taking over the market. These are the most popular global websites, so this includes everybody. You'll see Venti Privé is definitely on the top of this one, followed by Marcofoni, which is a site in Turkey. Okay, so Rivalry. Okay, I just wanted to say something about switching costs before I go into the forces. Because we talked a lot about the psychological effect that people have with these sites and how they're shopping for deals. So there are some switching costs for buyers that are very brand specific. So if I'm on a site and I just want to buy a certain brand and I want deals for that brand, then my switching costs are going to be higher. But typically they found that that is not the buyer in these on these sites. They don't necessarily care about the brand as much as they do the deal that they're getting. So we have put switching costs as low, but you can make the case that in some instances it could be higher depending on the customer. But on an average, we feel like it's low. So the Rivalry, we have moderate to high. For intensity, moderate. There's numerous competitors, mostly equal in size. Venti Privé is very, very large compared to the rest of them, but there are sites catching up to them. Overall growth is slowing and the exit barriers are low. The basis for price competition is very high. Price competition transfers profits to customers. They're identical products, different brands, but like I said, you know, handbags on one site are handbags on another site. So the brand may or may not matter in those cases. So a few switching costs, and fixed costs are moderately high, but currently they have high margins as well.
So even though the prices are drastically discounted, it's still far above the actual cost of making merchandise.
Yes. Yeah, because the margins that the brands are making on these are huge. I mean, the cost of making, you know, a Coach bag in China versus what you sell it for, which is thousands of dollars. So even if you're taking a 70% discount, everybody's still making money. But those margins are shrinking, which we'll get to.
Okay.
New entrants, there are hundreds of new flash sale sites in Europe. The US market is growing just as large. Many startup venture-funded companies, many existing e-commerce sites with flash sale platforms, and retail companies are starting or acquiring flash sale platforms as well. So the threat of entry is very high. barriers to entry are very low to moderate. Moderate supply side economies of scale. It does require 200 to 400 million in sales to be profitable in this market. Network effects are high with respect to selection of brands, moderate with respect to number of buyers. Few switching costs, little capital requirements. You would think that it would require a lot of capital to start one of these and buy the goods, but we'll get into they have a block sell and ship like model that they use. So they reserve these goods from the brands. They don't actually buy them until they sell them.
So the number 2 to 400 million in sales to be profitable, is that because that's the volume you need to have enough to cover like fixed costs? Like
yeah, and the fixed costs are relatively high because they have to list and database the products. They have to photograph the products. So there are a lot of fixed costs. It's just the capital to get into the market is not very high because anybody can reserve the products to sell them.
On credit.
Does that make sense?
Yeah, on credit.
Yeah, well, yeah, it's not even necessarily on credit. They, at least in the beginning, it might be switching now, but in the beginning, they just reserve it. They say, we think we're going to sell 500 of these. We want to reserve those. Then they get paid by the buyers, and then they pay the brands.
I was wondering, there was a movement where about maybe 4 or 5 years ago where eBay started unloading undesirable goods from producers.
eBay's in this market too with Woot is the name of one of their private sale sites. What's the other one? They actually no, is that Amazon?
Yes, Amazon.
What's eBay's called? eBay has one too, and so does Amazon. It has two, and eBay has one, and they don't really associate their names with them, but they exist.
That's interesting. So did they follow the market or did they initiate?
They followed the market. Established brand identities, but little other incumbency advantages at this present time. Expected retaliation, they can only retaliate based on price. They really don't have any other means to retaliate. Substitutes, this is where the market gets a little bit interesting because there's definitely a fine line between substitute and competitor in this market. So substitutes include industries like bricks and mortar retail and traditional e-commerce sites. So with membership clubs, you have like Sam's Club and Costco, but they're not really high end, so they're not really competing. They're more in that realm of substitute. You have the discount stores like TJ Maxx, Century 21, Marshalls, which could be argued if you were going to make the case as a competitor in the market, but they kind of they're focused on a different segment. It's not as affluent of customers as private sales have, but they're getting the same goods.
Is that really true that it's a more affluent demographic that goes to a private sales site than
yes, they're actually price sensitive, but they tend to be wealthier than your typical e-commerce customer. And we'll talk more.
In terms of like a typical discount store customer, like a TJ Maxx or a Marshalls, where they're also selling like name brand stuff that's overstocked in the main channels. Is that?
Yeah.
Those customers tend to be less affluent than the ones that go to the flashlights?
Yes, and the difference I think between the two would be time. So a lot of buyers that purchase from these flash sale sites are very short on time. They're very busy people, trendsetters if you want to call them. Zulily is kind of catering to busy moms. These are people that just want to buy something and be done with it, and they're not the people that are going to go, sift through the racks at Ross. It's not the same kind of people. So the brands are the same. These brands are offloading their goods, but it's really two different buyers.
Don't you have to watch it for many days because if things are appearing and disappearing on this very tight time scale, or is it just you want that people go there, like you say, for the pleasure of buying something that is ordinarily expensive for cheap, and it doesn't matter what it is?
That's one of the reasons why people buy. And the way most of these sites work is they send you an email. And you can actually you can change your preferences on the emails if you want. So, I mean, you can look for specific deals in specific markets of retail. So, like, if I want to see deals on, like, you know, kids' clothes, or, like, you know, high-end fashion, or, you know, Gucci bags or whatever. Like, I can decide, you know, kind of targeted what emails I want. And the sites are also doing targeted emails as well, trying to figure out what they think you like best and sending those emails to you.
Okay.
They're also competing with specialty retail, so like Coach, Tiffany, Abercrombie, and they're also, well, not competing, it's a substitute, but the profitability of specialty retail is down as well. And another substitute, like I mentioned before, would be Groupon. So it's a slightly different model, but some users could choose to go with that kind of platform instead. So the threat of substitutes is moderate. All these substitutes, they have a similar function: sell you goods at a deal, right? So I mean, and they can limit the industry's profit potential by having these people go to, you know, different platforms. In some cases, the price performance trade-off is attractive, but these private sales really are the lowest price. So that's why I consider the threat of substitutes moderate, because they can't really compete on price, and that's where this industry is at right now. And then the suppliers, which are oh so many. Every market you can think of. Think of a retail market, there's a private sale flash site that sells in that retail space.
But only high margin?
Only at a high margin.
Only high margin retail, like, you know, handbags, like you said, are just, those are the classic high margin.
Currently, I'd say within the last year, yes, it is shifting. And we'll get to how Zulily is shifting that model by offering low end. Oops, sorry. So suppliers come in from fashion designers. They come from furniture brands, beauty brands, children brands, brands. Everybody's jumping on this one. The power of the suppliers is moderate. So the market brands are more concentrated than the industry, but on an aggregate level. So like if you take like the fashion designers, for example, they're very few and they're usually individuals. So they don't have a lot of power, but there are some brands that do have a lot of power in this space, moderate. They don't depend heavily on the industry for revenue. So we saw the substitutes, they can sell to these substitutes. They don't have to sell to these flash sale sites. So that gives them a little bit more power. Switching costs are low, but the buyers are accustomed to certain brands. So there is a possibility that if your brand pulls and goes with somebody else, that you could lose those customers if they had gotten very used to that brand and that they were purchasing from you. There are substitutes, but the brands attempt to differentiate. There's a possibility of forward integration, possibility very small, with the brands. I don't think there are any examples that I could find. It's really the retailers that are trying to get into this space.
I'm sure the brands wouldn't want to damage their name.
Yeah, they're very much wanting to.
The owner of these things, right?
But you know, you see with like Amazon and eBay, like we were talking about, they have these flash sale sites that they don't really associate their name with.
Right.
So the brands could do that. The brands could do that if they wanted to, but it just seems to be very little incentive for them. It's not, So the buyers, e-commerce shoppers in general tend to be more tech savvy, educated, and affluent. Flash sites offer high-end luxury brands. They call them to the urban sophisticates. Age anywhere between 20 to 40. 60 to 70% of them are female, and they're people who are very short on time. The typical profile is somebody who is price sensitive and looking for deals on high-end goods or spontaneous travel deals. That's a whole nother part of the market that we don't really get a lot into. But there's a lot of flash sale sites in travel as well.
Oh.
The power of buyers is low to moderate. Buyers are extremely price sensitive, but they're not necessarily strapped for cash. Switching costs are low unless they're really brand loyal. Buyers are fragmented, so they don't purchase in volume. Sites attempt to differentiate with respect to the brands. Additional factors. So as I mentioned, the industry growth rate is slowing. It's giving buyers and suppliers additional power. Technology is giving certain incumbents competitive advantage. Gilt has this personalization algorithm that tracks what you click on their site, how long you spend on certain things, to identify demand signals. So even if you're not buying something there, they're watching what you're looking at. They're watching what emails people are, actually clicking on and looking at, and they're trying to gauge the newest trends. So that gives them a slight advantage. Complementary products such as blog and review sites may be the next wave of competition. So Daily Candy, which is actually owned by Comcast, they don't really tell you that, but these huge conglomerates like to own lots of things. They're a shopping, trend, and travel recommendation site. So basically they're like a newsletter. They don't sell anything. And when everybody was jumping into e-commerce, they were like, we don't want to sell anything. We're just going to make recommendations. But when flash sales came in, they went, this is our opportunity. And they saw something about this model that they really liked, so they decided to jump in it with Swirl. So this industry is definitely filling a niche in e-commerce.
And is Swirl a flash travel or flash merchandise?
It's flash merchandise.
Flash merchandise.
Yeah. And basically what they're trying to do with Swirl is they're trying to leverage their existing customer base, which is why they're being very successful in this area right now. Social media helped launch many of these platforms, but it's not currently where people go to engage with brands and promotions. That is changing with flash sites like Zulily, which are definitely more socially media driven. Venti Privy flat out says social's not where it's at. We don't care about that. And they're the industry leaders, so I'm not going to argue with them. They're doing fine. Is it a winner-take-all market? So it's definitely a multi-sided market. You have the brands, you sometimes have the retailers, the flash sale sites, and then the customers. Multi-homing for both brands and customers. They're doing business with many flash sale sites. There's no natural monopoly, no strong scale economies because the fixed costs are too high. Multi-homing costs for both sites is low. Network effects for consumers. So they have a desire to access more brands, but there's a negative effect from having more buyers because then they lose out on deals to other buyers, which is very different from the Groupon model where you want more buyers because then the price goes down. The network effects from the brands is positive, but there's diminishing returns with respect to the number of customers because there is only so much product. So the brands are not really benefiting from these huge sites like Venti Privy who have all these customers because it's still a limited lot size compared to the amount of customers that they have. There's negative effects from having more brands if the brands are not differentiated. Consumers, although they may have brand preference, which is very transaction specific, their needs are relatively homogeneous. So this could be served by a single platform. It's possible. That's the only speculation I have on that.
It's possible that you wouldn't say probable.
No, definitely not.
No. Okay. Yeah.
Expected changes. Changes in Rivalry, like I said, there's shrinking margins. And it's as I might say that in here. So the brands have gotten better at gauging demand, and because we've come out of the recession and there's less extra stock, that's contributing to the shrinking margins. There's more differentiated product offerings. Changes to substitutes. So Groupon is expected to overtake Venti Privy this year. So is that a better business model? Is it a better strategy? Flash sale site, ideally, is now offering group buy. So maybe it is a better strategy. Retail stores and sites are starting to acquire flash sale sites. So the retail businesses are like, we're losing sales. We don't like this. So Nordstrom purchased Hotlook. GSI Commerce purchased Rulala. Overstock founded Aziba. Amazon founded Woot. And Blue Nile founded Zulily. Changes to suppliers. Brands are getting better at identifying demand, so there's less excess stock. Changes to entry. Available lot sizes are shrinking. Brand relationships and network effects are becoming more of an advantage. And changes to buyers. Sites are targeting new segments, buyers of low-end goods. So some of the strategies that we're seeing, sites attempting to raise switching costs through loyalty programs, offering points for higher discounts, and early access to deals. Sites are attempting to raise switching costs with exclusive contracts with brands. So you have to come to my site if you want that bag. You can't go anywhere else. I'm the only one that has it. So they're trying to force these switching costs. Right. Sites respond to complementers entering the market by incorporating blogs and reviews into their sites. They're trying to build a community so that those complementers can't encroach. Sites are marketing promotional tools to brands, leveraging their real-time data. And sites are utilizing social media complementers to target different segments.